All right, let's dive into the market for Wednesday, January 21st, 2026. And wow, what a day. The market did a complete 180, and we are going to unpack exactly what happened and why.
It is just amazing what a difference 24 hours can make. Seriously, yesterday, the big story was sell America. Total panic driven by all these geopolitical threats. And then today, a complete flip. We saw a huge relief rally sweep across the board, turning everything from deep red to solid green. That kind of whiplash is intense, and it really boils down to two key stories.
So that's the billion-dollar question, right? What in the world pulled the market back from the edge? How did we go from widespread fear to a full-on buying frenzy in just one day? Well, the answer is this really fascinating mix of politics and tech. Okay, let's start with the political side of things. This was the big one. The market was basically holding its breath, bracing for a trade war with Europe, and get this, a potential military standoff over Greenland. Yeah, really. But then something shifted. We got what traders are now calling a classic taco moment. So what on earth is TACO? Well, it stands for Trump Always Chickens Out. And look, let's be clear, this isn't about making a political judgment. It's a theory the market has developed. The idea is that there's this pattern, right? You introduce an extreme threat to get as much leverage as possible, and then you back down once negotiations get going. And today, the market bet big that this was exactly what was happening. And boom, there it was. Speaking from the Davos Forum, President Trump just completely pulled the plug on the two biggest fears that were hanging over the market. He came right out and said, "We will not use force for Greenland," and then he put those big scary tariffs against the EU on the shelf, talking about a new framework for future negotiations. That was the trigger, right there. The risk that had been crushing stocks, it just poof, vanished, almost instantly. So at the same time politicians were pouring water on the fire, a tech visionary was pouring gasoline on it. In a good way. Far away from all that geopolitical drama, NVIDIA's CEO, Jensen Huang, steps up at Davos and delivers this incredibly powerful counter-narrative that just added rocket fuel to the rally. I mean, think about it. At a time when everyone's whispering about an AI bubble, is it real, is it not? The CEO of NVIDIA comes out with this. He completely reframes the whole conversation. He's saying, hey, this isn't some speculative frenzy. This is the very beginning of the biggest infrastructure project in the history of humanity. That is a massive statement. And he didn't just say it. He laid out a whole roadmap. He called it the 5-layer AI infrastructure cake, which is a great way to think about it. It gives investors something really tangible to hold on to for the long term. And it's so much more than just chips. Layer 1, the base of the cake, energy. AI is just incredibly power hungry. We're going to need way more power plants, a bigger grid, the whole shebang. Then, layer 2, semiconductors. Okay, yeah, this is the chips, the specialized brains, the GPUs, the accelerators that make it all work. Layer 3 is the data centers. You can think of these as these huge, super efficient factories built to house and cool millions of those chips. Next up, layer 4, the AI models. This is the software, the brains of the operation, the huge language models being trained inside those data centers. And then the final layer, the icing on the cake, bio and industrial apps. This is where it all pays off, revolutionizing everything from discovering new drugs to completely automating factories. Okay, so you've got these two huge stories hitting at the same time. Political relief and this massive wave of tech optimism. But talk is cheap, right? What does the hard data say? Let's follow the money and see how it actually reacted. And the verdict from the market was, well, it was loud and clear. It was a huge, broad-based rally. All three major indices just surged. The S&P 500 up 1.16%, taking back that 6,875 level. The Dow Jones jumped 1.21%, and it's getting really close to that 50,000 mark. And the Nasdaq, loaded with tech, was up 1.18%. The key here is that this wasn't just a few big names carrying the market. This was a market-wide sigh of relief. And if you want to see what that relief looks like in a single number, just look at the VIX. The market's fear gauge just fell off a cliff. It absolutely collapsed, down 15% to close at 16.9. Remember, yesterday it spiked above 20. This massive drop just shows you how fast that panic disappeared once those big threats were taken away. Looking at which sectors did well tells the whole story. It was a classic risk-on day. What does that mean? It means money ran away from safe, boring stuff and piled into high-growth areas. The semiconductor sector was absolutely on fire. Intel soared over 11%. AMD was up 7%. And on the flip side, the safe haven sectors, like consumer staples, they were totally left in the dust. Investors were shedding their safety blankets and chasing growth.
And other key signs all pointed in the same direction. The 10-year Treasury yield actually fell, which is interesting. But it wasn't because people were scared and running to safety. It was because those immediate risks just melted away. The CNN Fear and Greed Index, it snapped right back to neutral at 51. And this is a big one. The Russell 2000, which tracks small-cap stocks, hit a new all-time high. That's super important because it signals that the good feeling is spreading out beyond just a handful of big tech companies.
All right, so after a day with that much whiplash, the big question is, okay, now what? Where do you go from here? Let's break down the big winners and losers and look at a couple of strategies that are popping up after today's action. Today's MVP was, without a doubt, Intel. It just rocketed up 11%, riding that AI optimism and some hope for government support. NVIDIA, of course, also got a nice 3% bump from its CEO's big speech. Now, on the losing side, we had Netflix. It actually fell 2.5%, even with good earnings. It seems investors got spooked by worries about acquisition costs and a kind of cautious outlook. And then there's Kraft Heinz, which took a 5% hit after news broke that Berkshire Hathaway might be looking to sell its entire stake. Ouch. So this really leaves you with two pretty different ways to play it. The aggressive path is to lean right into today's story. You bet on that whole AI infrastructure build-out, maybe with an ETF like SOX for the chip makers, and you bet on broader U.S. growth with IWM for the small caps. But then there's the defensive play. This one says, hey, let's not get ahead of ourselves. It uses an equal weight ETF, something like RSP, so you're not too heavily loaded up on big tech, and you might hold some gold, maybe through GLD, just as a hedge in case another geopolitical surprise pops up. Okay, let's zoom out for the final takeaway here. We have to ask, was today's huge rally just a knee-jerk reaction to some short-term noise? Or are we looking at the start of a new reality for the market?
You know, this quote from Keith Gang of Gradient Investments just nails it. It perfectly sums up the choice the market made today. You had this constant barrage of scary geopolitical headlines, and investors basically said, you know what, that's just noise. They chose to tune that out and focus on what they see as the real signal. And that signal is the long-term fundamental story of tech growth, especially in AI.
But, and this is a big but, it's so important to remember that the risks didn't just disappear. The good news today was overwhelming for sure, but there were some pretty clear warning signs bubbling just under the surface. For example, a report on pending home sales came out, and it showed a huge 9.3% drop. That's the worst we've seen since 2020, and it points to some serious weakness in a really key part of the economy. And yeah, the markets celebrated the de-escalation today, but let's be real. The fact that policy can be so unpredictable is still a major risk factor going forward. And really, that brings us to the ultimate question for every single one of us as investors right now. We're in a market that can be jerked around by tweets on one hand and completely reshaped by profound tech revolutions on the other. So the key to everything, the real challenge, is figuring out how do you separate the signal from the noise.